help us, international investors, understand what do we need to know about the defence of the Hong Kong dollar peg, the Taiwanese dollar and its surge, and all the questions surging around that. From an international perspective, what do we need to know about what's going on in Asia FX right now?
I think we need to know that this is the next leg of the general slow depreciation of the dollar theme, but that it has got carried away in low liquidity markets. Remember, we had holidays across much of the region, and so these moves are really kind of exaggerated and stretched. And this is not some, I mean, the moves were 7 sigma moves that you shouldn't see in your career trading dollar Taiwan. So they really were quite extraordinary. They're not the start of like of a continuation of that kind of trend across currencies in Asia. But this is, and we've talked about this a lot over the last couple of months, this is going to be like a lower beta version of the 2000s, where the world is going to move from being very heavily leveraged into US dollars to realizing that they want to diversify their holdings more broadly. This is not about abandoning the dollar entirely, it's about just lowering their exposure to the dollar. And that's going to be the theme of the next few years. And it's not normally going to play out in the space of just 2 trading sessions like we've seen in dollar Taiwan, but we are going to see some temporary dislocations because we're in the middle of a regime shift, and regime shifts happen over several months and we get those temporary dislocations.
Mark, we have, though, in history seen some fairly big FX moves that have profound effects, and I'm just wondering whether or not something breaks. The world is largely unhedged at the moment, and that means that it's vulnerable.
I think there's a real risk. So first of all, you know, I was asked earlier on today, is there a risk that these moves get underestimated and how far they can go? And I think, yes, that's always the case. People are very tame in their predictions. We've talked quite a bit, Guy, on this show about I think euro-dollar goes to 130 before 104. That was back when it was around 107 level. And, you know, I was just being conservative. I think, it's, you know, that's a 20% move, and I think that's what we're talking about. But over the next few years. Now, in that multi-year path of a 10, 20% dollar decline, we're going to get brief moments of really exaggerated moves. And does something break? Yes, short term. Now, not break as in the financial system breaking, but just we get sudden capitulation moves in certain currency crosses, kind of like we've seen in dollar Taiwan in the last couple of days. And are there going to be spillover consequences to other assets? Yes, because as you say, many investors haven't been used to this regime change in FX and what's happening. So some things will break, but not financial system level breakage.
Mark, we had a guest on the program earlier talk about a euro that could potentially hit 125 within the year. Is that viable given the massive moves we're seeing in the dollar?
Absolutely. As I said earlier, Kriti, I think, you know, 130 before 104 is what my motto all year. That's become a bit of a stupid thing to say. If we get above 120, I'll have to change, you know, the lower limit. But I think there's lots of topside. I don't know exact timeline. 125 before the end of the year is not particularly ambitious in the scale of this move. It's perfectly reasonable. I'm not saying I'm highly convinced we get there before the end of the year. I think that the euro story is structural and it takes a lot of time to play out. But the dollar story is also structural. It takes a long time to play out. So you've got 2 big structural stories and they're supporting euro dollar for a big move. What time span, I don't know.